You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionFit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time to commence our broadcast week here on the Options Insider Radio Network. And we kick it off, as always, with episode uno here of your bi-weekly options extravaganza known as the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever scintillating, at least we hope so, Options Insider Radio Network, reminding you whatever you hear on this network, whatever shows you like out there. Maybe you like it all, maybe you like some, whatever your flavor is. There's a lot of shows coming at you. You can easily pick or choose. Make sure you keep rating and reviewing the content wherever you get it. It does help new folks continue to discover the ever-evolving buffet that is our network. And, of course, keep those questions and comments coming, too. Keep playing along, voting in our polls, listening live. If you want to get it in your ear holes immediately, you know where to go. The Mixlr for now, looking at expanding. Now you've asked for expanded platforms. You're looking into expanding that. Right now, it's still the Mixlr, mixlr.com, mixlr.com/options-insider. Something along those lines. It's the same link every time, so once you get it, you can save it and you have it every time. And, of course, keep those questions and comments coming, too. We do love to hear from you folks, and I ask you, I dare you to go out and find any other options network. There really aren't that many anymore, except the ones that are a couple that are owned by brokerage firms now. But outside of that, who starts off your week with a name that 80s theme song challenge? I dare you to find one. And, you know, when we kicked this off, one of the reasons we did it was to kind of get the blood pumping, get you going on a Monday morning there. So we started with some action-oriented themes. I think we're going to go back to that now for today's one. It's actually a timely one. You'll see why in a minute. But now we're going to go back to that, you know, that great genre of television that vanished in the 80s, the lone man against the system, the lone man fighting crime. You don't really have those shows anymore. And they all had pretty interesting and awesome. This one's kind of more in the eerie category, but you'll see what I'm talking about as we get into this week's Name That 80s TV Theme Song. right, there we go. A little eerie in the beginning. I could actually see it going by here. Some kind of spooky imagery going on there, it's kind of fun. Again, a genre of television that is kind of lost to the sands of time. But as I say that, one of the reasons we selected this is because it is kind of timely. Because I'll give you a little hint, listeners, and our two guests, listeners, or two guessers in a second as well. This is one, even though it's kind of an obscure show, it has been remade, actually, multiple times into a movie. And I do believe the movie got a sequel, so actually 2 movies. And I do believe it may be returning to our television screens forthwith, if it even isn't there already. So this one's had a kind of a renewed interest of late. So let's go around the horn. Let's see who we've got. Let's start in the land of brisket and chili and all things Tex-Mex, a.k.a. Texas, a.k.a. where we are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. And can you name that 80s unique beast that we just played, sir?
Well, weirdly, I could not hear the music today. But based on what you told me, I'm going to take a guess at Starsky and Hutch.
Interesting. That was remade. I think I had more of like a late 70s kind of into the early 80s show. I mean, I watched it too, but in the early 80s. But that's got a 70s vibe. That was remade as a comedy with Ben Stiller. I don't think it's made into a TV show, though. But I will say you are not correct on that one. Let's go around the horn now to our reigning and defending champion, the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the show to you. And B, shall we kick off our broadcast week with yet another victory for Uncle Mike? Can you name that show, sir?
I could not hear the music either, but based on what you're saying, I don't know of any movies for it, but based on the one man versus fighting crime, I'll guess TJ Hooker.
Neither of you could hear the music? All right, hold on. Let me see if I could. I don't know why you can't hear that. Let's check.
We can keep guessing. We can keep guessing if you want.
No, we'll head on into the trading block, and I'll see if I can get it going for you a little bit later. Let's do that. Head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
I think I see now why you could not hear the music. So really quickly, we're going to try it for the third time. Like this show. The third time is the charm. All right, here we go, listeners. All right. Third time's the charm. Let's go around the horn again. Mr. Meatball, can you guess it, sir?
That's not one I know. So I'm going to go Spencer for Hire.
A good guess. A good guess. Also kind of an 80s lone man against the system show. But no, Mr. Uncle Mike, returning champion. Can you guess it, sir?
I don't know it either, so I'll just I'm not very confident in my original one, but I'll just stay with TJ Hooker.
Wow, stumped both of you. Even the champ, Uncle Mike. It's the Equalizer. I shall equalize the odds. Remember that old little British man in an alleyway who somehow was equalizing the odds against gangster thugs? It has been remade, a movie with Denzel Washington. I believe they had a sequel. And now I do believe they're remaking it again with Queen Latifah in the starring role. It may even be on TV as we speak. I don't know. I don't really watch a lot of live TV much anymore. So it's a show that's kind of obscure, yet it has an interesting shelf life. All right. Or maybe it didn't have enough to warrant 10 minutes on it, but here we go. We're diving in. That's how much we love you, listeners. I want to make sure everyone gets their chance to tilt at the windmill. Speaking of tilting at windmills today, the markets are doing quite the thing. By the way, happy Ides of March. Beware those knives out there if you are so inclined to have big knives around you all the time. It's a weird one coming into today's market, listeners. Markets, as we're kicking off the show here, back ever so slightly in the green. They kind of started off in the green, then they kind of said, no. Went right back down again. Maybe Fauci spooking him a little bit with all his talk of variants and whatnot, and then all of a sudden right back up again. So here we are coming into showtime now, a little bit post-equalizer with most of the major markets slightly in the green. S&P effectively unched on the day. The Dow up about 0.1%, and the NASDAQ closing in on 0.25% to the upside. That's after, again, rallying, selling off, rallying again. So the vol markets have been interesting beasts to watch today. Net, they're kind of coming off now, but for a while there, it got to be an interesting story. VIX, as the show kicked off, is right around 20.75, puts it down almost a full point, about 0.85 from our last show. That's after getting up a little bit after during the sell-off and all sorts of interestingness. VVIX, 109.5, down about 2.5 points. It goes up to north of 112 at the start of the show, right before the show, actually, and then kind of came off a little bit as well. VXX continuing to give up the ghost, down about 0.5 point from our last show, down to about 1370 when we kicked off the show. And VolQ, a little bit shy of 27, about 2680. That actually puts it up about 0.25 point from where we were last show, effectively unched as well. So let's go around the horn. Since neither of you won, I'll just keep going the way we went. Let's start with the meatball. Sir, what is lighting up your tape out there in a kind of a bit of a schizophrenic market, sir?
Yeah, it's a weird one. We do have money flowing back into NASDAQ stocks today. Apple, AMD, Microsoft, all the FANG stocks are up. Meme stocks down. GameStop, we initially sold off because GameStop made like a $30 reversal. And last I checked was down like $15. A lot of strength in reopening names. The airlines are all killing it today. The cruise liners are doing well, and retail is doing well. JW Nordstrom Inc. Is up close to 10% right now. Just a really strong move out of the retailers on that reopening trade. They're really pushing the reopen trade. On the other end, it's a soft day for banks and oil. Oil stocks getting a little bit of a slap in the face, and banks are down as well. So a lot of the winners from last week are down, and the losers from last week are up. So there you have it.
There you have it, indeed. And what do you make of this weirdly schizophrenic vol market? I mean, it kind of makes sense. We're giving and taking, so the vol markets are giving and taking. But anything catching your eye in particular as you kick off the week, sir?
Yeah, VIX is starting to really take it in the chin. It is really soft. It's about unched on the day now. Coming off a weekend, remember, there's this weekend effect that causes the VIX to be up on Monday. So VIX is effectively down. Vol markets are starting to see a lot of pressure. We still have, and I put this out in my note this morning, we have a size up open interest on downside VIX puts. And, we talked about this on Vol Views on Friday. We could see some real downside pressure on VIX created by all of this open interest that still remains open in March for the VIX contract. Mark, I know this isn't a VIX-centric show, but there is just a lot of open interest between the 23 strike and the 18 strike expiring Wednesday morning. I mean, we're talking north of 1 million contracts, all downside puts. So as those start to get as the delta on those starts to perk up, market makers are going to start seeing some delta drift that could continue to push these things lower. And if, I would say the 21s and the 20s really start to get a meaty delta, you could see some kind of, a little bit of a gamma squeeze on VIX to the downside as market makers are forced to sell vol. The 20 puts were at a nickel Friday morning. They're like, I think they're about to go 15 cent at 20 cent as we move lower, and those could really perk up if we get a little bit of a push lower. So the vol markets with that expiration coming are really moving, and that in addition is putting some pressure on the vol ETPs. UVXY, they're going to announce a reverse split this week at the rate that they're going. VXX at this rate could be on the wrong side of 13 by Friday. And especially if we get that VIX dipping below 20. And vol dropping like that is going to naturally force the S&P higher. So, I'm kind of bullish on the S&P as the week progresses.
Yeah, you've been talking about that, the great sucking sound of volatility for a while, and it does seem to be sucking yet again as the show is kicking off here. Mr. Uncle Mike, he never sucks. So let's go on out to him, Mr. Uncle Mike, sir. Kind of getting back into the Uncle Mike type of day after flirting with not so much earlier in the session. What is lighting up your tape out there today, sir?
Well, I think that what I'm looking at, in addition to what Mark was saying, is that we do have the Fed meeting this week, and one of the bigger stories of the market that I know that I've been talking about the last couple of weeks is the 10-year yield in the 1.5% mark, 1.6% mark, and the rise in yields. Now, the yield is we're not having a lot of movement in the 10-year note today, but we do have a Fed meeting this week, so I think that kind of the market at this stage, at least, is kind of in a wait-and-see mode to see what the Fed actually chooses to do with this. And that when Powell spoke a couple weeks ago, we did have a pretty big market move after he was speaking, in that it's one of those markets to where it seems that no matter what he says, it's wrong, but it might be right. And so the market needs to wait to see if it's right, and then it'll be right unless it's wrong. That's kind of what it feels like right now with the control that the Fed has of the market. So I think that we're in kind of a wait-and-see mode today, waiting upon what the Fed is going to say. And if we do have something that the market likes from the Fed, I think we could see the VIX dropping as early as this week, or as early as Wednesday when they speak. And I could see some dropping vol and rising markets, or if they don't like it, then we can see the opposite, of course. But I think that's the big news right now. Of course, we have some rotation going through stocks, like Mark had talked about. But I personally think the big thing that's lighting up my tape at this point is I'm on FedWatch.
And if you too are on FedWatch, check out the FedWatch tool over there at CME. We talked about it on our TWIFO show multiple times. Now, it was kind of a tool that was, for the better part of the last year, was kind of dead. Not a lot really going on out there. But in the last few weeks and months, it has started to spring to life. We talked about not so much at this upcoming March meeting, but in the meetings beyond it. We're seeing, I think the next meeting beyond March, was about a 4.1% chance of a hike, a 25 basis point hike. And you get beyond that meeting all the way out to later in the year, and certainly towards the end of the year. Now you're seeing almost a 10% chance of a rate hike. So these probabilities they're pricing in are no longer de minimis out there. They're actually legit, and certainly they have sprung to life over the course of the past month and change. So check out that FedWatch tool if you haven't. It's kind of interesting, and it breaks it down in an intelligible way, even if you don't watch the treasury markets on a regular basis. What you folks do watch, though, are the options markets. Let's get into them right now. VIX doing some paper out there, which, again, not surprising. It's kind of vacillating a lot today, up and down, up and down. That usually tends to generate some interest and some paper flow out there. We're seeing closing in on 500,000 contracts as of a few minutes ago, listeners. So that's actually a pretty good clip for VIX, about 487,000 contracts on the tape. Then we've got SPY at about 2.2 million or so, and which ADV a little bit north of 4, about almost 4.5, actually about 4.4 million. We've got the S, 757,000 contracts, ADV decently north of 1 million now, almost 1.25 million, which is pretty decent for the S. If you've been listening to the show for a while, that got pretty low for a while, maybe alarmingly low for some folks who were keeping an eye on the legacy pit products post electronic era out there. It wasn't looking too good for them. Then, of course, we've got the Qs, 487,000 contracts, ADV 1.4. So the Qs have gotten up there. In our last couple of shows, they were already threatening 1 million contracts at this point. So today, a little bit of a lighter day for the Qs. It's not moving plus or minus 1% right now, at least. And the Russell, aka IWM, also kind of comparatively light, 212,000 contracts. The ADV is slightly shy of 700K, about 688,000. So both the Qs and the Russell taking a bit of a break today, at least from a volume perspective. Let's go on out to the top 10. And it's got your dose of meme names out there this week. Actually, a couple have actually been punted. I don't see AMD in here this week as well. So finally, some of the meme names toppling AMD from the top 10. Number 10 actually has been a return offender every now and then. I wouldn't quite call it memey, But it is interesting, folks, of late. This is, of course, Nokia, ticker symbol NOK. And the price might make it a little bit memey. It's $4.31 right now, so that could alone qualify it. I don't know about the short interest out there, but that alone could qualify it just from a price level as a meme level stock, doing 270,000 contracts today. So an aggressive day for Nokia. That's how the Finns say it, I think, Nokia. And then number 9, a newcomer to the odd block, or indeed to the top 10 here. This is SOS Limited. This is a software company out of China. Looks like there's some legal action around this name today. And that's translating to the tune of 280,000 contracts. By the way, it's $8.19 right now, up about $1.60. So an aggressive day here, 23.5% for SOS Limited, obviously an ADR. Number 8, old friend Sundial back in the top 10 here. Good for 291,000 contracts. Sundial north of $1.50 right now, closing in on $1.60, up 16 cents or 11.25%. So this one's kind of feeling its oats, getting kind of memey again out there. Of course, they're in the cannabis sector these days. Number 7, the old formerly Dow. We all learned that last week, or I should say really remembered it. We all forgot it. Of course, GE, no longer the stalwart of the Dow, now just kind of its own weird beast, doing its own weird things, and it's translating to 346,000 contracts today. By the way, GE up about 4 2/3%, or about 60 cents right now, a little bit north of 13, about almost 13.20. Our friends across the street also back in the top 10 here. Boeing, 355,000 contracts. Good for number 6 here. You know, they were just recently, just had like their best day in ages last week. Not so much today. They're actually giving up a little bit today. But again, who can argue after that run they've had of late? It's been since March 10th, they've run 20 odd handles. So yeah, not a bad run for a name like Boeing that hasn't had many good runs of late. Number 5, Palantir, 400,000 contracts even. Palantir is usually 3 or 2 these days. So down to 5. That's kind of interesting. Let's see what's usurping them. Actually, number 4, this is one we don't see in the top 10 too often. This is American Airlines. 449,000. They're up to about $1.64 right now, to about 25 and change. So 25.02. So up about 7%. So a good day for American Airlines. Number 3. Yes, number 3. I said it is Tesla at 538,000 contracts. So what could usurp Tesla really at number 3? Well, it's AMC bumping in to the number 2 spot. Some folks going to movies, maybe Mimi, whatever is driving it up there these days. They actually said they have enough capital to kind of survive in the near future. I think a little bit of that capital raise helped them. Either way, movies coming back. Either way, folks liking it to the tune of up nearly $3 today. 26.6. It was trading $5 not too long ago. So feeling the meme love today, and good for number 2. 829,000 contracts. Number 1, you know what it is. It's the big dog. It's Apple. But it's well off its usual level. Usually it's at about 1.1 or so million contracts right now. Right now, 841,000. So all that oxygen in the room can't all go to Apple. It's getting sucked away to some of these memey names out there as well. But still a fascinating top 10 out there today. A lot of interesting names you don't always see out there, and some other ones popping in saying, hey, what about me? And some other frequent stalwarts. You know, you don't see Microsoft in there today. You don't see AMD. Don't see Facebook. Don't see a lot of the names, the frequent offenders out there today. So a little bit of some interesting action. SOS, Sundial, breaking into the top 10 there. American Airlines, Nokia, all kinds of interesting stuff afoot. Let's see what's afoot here from an earnings perspective. If you want to deep dive into the earnings, Vol, by the way, listeners, earnings move reports. Check out Vol Views from Friday. We had Matt Amberson on. He's the keeper of all this earnings data, and he broke it down in extensive fashion on the show there on Friday. We'll see maybe if we can play it here in between the live, maybe between this show and crypto coming up later today. By the way, we got some good guests joining us for the crypto rundown. You want to talk about all things crypto, Vol? We got a good person to help us do that. So stay tuned for that a little bit later on the show. In terms of, or on the network, in terms of what's popping off this week from an earnings perspective, tomorrow we've got Lennar. They're, of course, in the home building section. Five Below, Uncle Mike's favorite. Actually, that's a little bit too expensive for him. He likes the dollar store. He's more of a Thursday Dollar General guy, which is popping off on Thursday. For the rich folks, Five Below is on Wednesday. Sundial also has earnings this week, hence probably some of this action that's going up today. And we got FedEx and Nike on Thursday. So still are some big names popping off out here. Let's see if we have any interesting move results reports If you were just dying to have the earnings move results report for Alpha Metallurgical Resources, ticker symbol AMR, well, I got you covered here. They popped off this morning before the bell. They were at 15.51 when they went into their announcement. They were pricing in 4.3%. They delivered 10.6%. This is not a name I follow with any sort of regularity here. Let's pull it up and see what our friend AMR is up to right now. To about 13.42 right now, off about $2, almost exactly, off 13%. So looks like they're outpacing that sell-off there a little bit, and interesting stuff afoot. In terms of the season, like I discussed with Matt on Friday, kind of yet another blood red one for the premium buyers out there. No week has surpassed 100%. The closest we got was week 4 with 99% and week 3 with 95%. Every other week was abysmal. Week 1, 56%. Week 2, 60%. Week 5, 73%. Week 6, 52% so far. So, yeah, it's not looking good for the premium buyers. We do have some names popping off, like I said, this week, some big names. Let's go to a couple of those. We have the preview reports for them live on the website right now. 5 below, they were at 190.8 as of this report. They were pricing in $14.08. In the past, they moved $13.41. So a little bit of extra vol, a little bit extra juice in the premium dollar store category out there. Again, a little bit too rich for Uncle Mike's blood. And then we go on out to Nike. They are on the 18th. They were at 140 and about a half as of this report. They were pricing in $7.14. And in the past, they moved $7.34. So there you go. Kind of from an earnings vol perspective in terms of what they're pricing in there for Nike. But something to keep an eye on nonetheless as we go on out throughout the week. And now it's time for our Eye of Sauron to keep its eye on all things. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we get weird, we get wild. We unleash our Eye of Sauron, and we see what it brings back for us, what it fixes its gaze upon. Maybe it's over there in the land of Mordor. Maybe it's over there in Rohan. Maybe it's up in the Shire. You never know. Let's find out together. We're going to kick it off back in the Meatball's favorite category, the luxury fashion retailer category. This is Farfetch. I believe we talked about them when he was on the show recently as well. Stay tuned. Maybe coming back to that one in a second. But first, let's see what our Eye of Sauron brought up today. Of course, this is Farfetch Limited, ticker symbol Fetch, FTCH. Trading right now about almost 58.5, about 58.40 actually, down about $1.10 or nearly 2% on the day. So not exactly a green day here for Farfetch over the course of the past year. A year ago, this thing was a pale shadow of what it is right now. It was $7.52. Obviously, it's coming off the great nadir this time last year. So it's had, just from that frame of reference, a year ago to now, this thing has been on a tear. Again, it hit a low of $5.99, listeners. Like I said, as of right now, it's $58.43. So it just shot up pretty much nonstop. By May 14th, it was trading about $16. By August 17th, it was trading $30. And then it was still around 30 till October 30th. And then it just shot up again and went from 30 all the way up to 43 on November 9th. And then by December 21st, it was trading actually higher than it is right now, 64.40. And then it kind of stayed in that range for a while. Then it got up to 73.35. This was back almost a month ago, February 19th. So it actually has sold off a bit since then. At a high of 73.35. Then it hit a low again recently of 53.5. That was on March 8th. And now it has bounced almost $5 off that low, back up to 58.5 or close to it where it is right now. So last couple of weeks, not exactly been great for Farfetch, but the last year has been just bonanza. This thing has taken off. Obviously, online luxury fashion retail is tearing it up. So let's see what we found out here, what our Eye of Sauron found. One of the larger single name options prints going up today. Kind of hard to miss this one. It was the April 75s going up for 45 cents. These are pretty much 45 cents bid out when this trade went up. So this guy was just pretty much crushing the bid. 28,625 times. Went up over there. It was like actually on the box. Oh, no, on the Amex. Went up on the Amex. Again, this is a 63.5 vol if you're so inclined. And there are no earnings, I don't believe, in this cycle. I think they're in May. Our friends over there at ORATS, they also run some scans, and they picked up on this one as well. Kind of hard, like I said, to miss this one today. They noted it as number 6 on their overall current volume versus 20-day average. That's how they like to scan for things there. At the time, they had posted about 35,000 contracts versus the normal volume of about 11,400. And they also picked up on these April 75s as well. So this one, kind of an easy one to spot. Mr. Meatball, it seems like someone out there has had a good run with Farfetch and perhaps deciding, yeah, you know what? If this thing keeps rallying, I don't mind dumping it at 75, which is roughly 10x where it was a year ago, sir.
Yeah, that's got to be what it was. The one we talked about last week or 2 weeks ago was what, the June 65s or something like that. Another customer was out selling calls. So this is a repeat pattern of call selling. Maybe May. I don't remember the exact trade, but this is a pattern we're seeing of some stockholders saying, you know what, I want out if this thing moves up much higher. I don't want to miss my chance. And if it's going to sit here, I'll just sit back and collect some premium. So, this is not overtly bearish Farfetch, but, if you're looking for it to go to 100 or something like that, this type of price action does not warrant that belief.
If you're expecting it to go to 100, you're just getting greedy at this point. This thing's 10x already over the course of the past year. Kind of hard to fault this guy for wanting to get the heck out of Dodge. By the way, if you want more Farfetch, stay tuned in a minute, listeners. First, we're going to go back out. We're going to put on our Wayback Machine and review some of the never-ending legion of trades we have profiled on the show, listeners. First, we're going to go back to January 14th. We're going to talk about everyone's favorite. This is Viatris Inc., ticker symbol VTRS. At the time, the stock was $17.36. It was, again, January 14th when we profiled 4,700 of the Feb 15 puts going off for 30 cents. And let's see, at the time, there were earnings right before this, I should say. The earnings, these were the February 26th. It was not the traditional monthly expiration. These are the weeklies. And the earnings were the day before, the 25th. So this was clearly an earnings-related play. And it looks like this one ended up probably working out. It looks like, let's see, this market, when they went up, by the way, we mocked this market when it went up. They were no bid at $2.80. So this 30-cent print at the time, it was kind of anyone's guess what the hell they were up to out there. It was nearly a 50 vol, by the way, if you are so inclined. So it seemed like we were thinking they probably sold these. But again, you never know with these bad boys. That 280 offer could have been complete nonsense, and they could have bought these things. So again, this market was atrocious. And let's see, that earnings on the 25th. It looks like these puts, they actually didn't wait for earnings, though. They took them off for a whopping 4 cents on the 22nd of April. Again, it was the exact same size, 4,700 contracts. So it was clearly the same trade. At the time they came in, these puts had now eroded down to a penny at a dime. So they took them off for 4 cents. So it seems like, again, they probably bought these bad boys back. So it seems like they probably drew a line in the sand here on Viatris at the 15 handle. And then they came and closed it out. The stock had dropped at that point, dropped to about 15.90 when they put up these puts. So the stock had dropped, but it wasn't quite threatening that 15 hand. Looks like they had decent timing, Mr. Meatball, because if they look at Viatris, where it is right now, it's shy of the 15 handle. It's 14.57 right now, even though it's rallying a bit today. So this thing has sold off since they took these puts off. So it seems like they drew their line in the sand, and it looks like they got 26 cents for their efforts here, Mr. Meatball. And they took it off before it got really bad against them. Is that your takeaway as well, sir?
Hey, you know what? You sell puts, you make money, and you cover. That is last time I read a book about put selling, that was one of the better strategies, in my opinion, to take in put selling.
Yeah, as opposed to many long premium trades we profiled of late, where people bought something and then did nothing to take it off. And then even though the move went their way, and they ended up losing everything. Let's go back now, Mr. Meatball, before we round it out. Let's go back to your favorite. This is Farfetch. This is one of the trades you and I talked about earlier, just this month, actually, a couple weeks ago. It was on March 1st. We talked about our friend Farfetch. At the time, we talked about the March 50 puts. So again, another sizable print going up in Farfetch. 38,665 times going up for 26 cents. Seems like paper was buying these. They were 16 cents at 31 when the print went up. By the way, that was a pretty hefty 78 vol at the time. The stock was 65 and a quarter. So about, almost 7 handles north of where it is right now, almost exactly. There are earnings, I should say, but they are not in this cycle. They are on May 13th. So we profiled at the time. It was about $1 million they spent picking up these puts. And then the stock, they got a move they were looking for, maybe not to the extent that they wanted, but the stock dropped to 53.30 on March 8th. So a week later, a week after this trade went up, the stock had dropped quite a bit, actually. So it had dropped nearly over 10 handles. It was 65 and a quarter when the trade went up. A week later, it was trading actually almost $12 shy of where it went up at 53.30. So it had a nice run to the dark side. And that was it. That was the extent of the move. And that also was it in terms of people doing anything with these puts. This is kind of what we said a million times, listeners. You got long premium trade, you get a move. This thing fell apart. It dropped, like we mentioned on the previous call profile. It had a sell-off there, pretty aggressive. And this guy got a move almost to his strike, and it didn't take him off. And now the stock has rallied to where it is right now, 58.40, a long way away from the 50 strike, listeners. And not surprising, these puts go out this week, and they are still open. They still had a bit of a bid to them. They were trading 16 cents pretty actively this morning. So this guy could come back in and get still 16 cents for these things. So he'd only lose a dime. So again, it's a lot of money, but it's not all of his money. So he could still take these bad boys off. For whatever reason, he is not. Mr. Meatball, what are your thoughts on these? Or perhaps do you think maybe that is a sign that this guy got a pretty darn good execution and he actually sold these at 26 cents, sir?
Yeah, you and I were still debating whether these were a sell or a buy. If he really didn't do anything with them, then maybe they were a sale. We'll know. My guess is that this is a hedge. He's going to want to roll, so there'll be some sort of trade associated with these in the coming days and in the coming days. If this guy is along, we'll see a sale, and then we'll see some sort of open, maybe around earnings. So yeah, it's definitely a weird one. I don't know exactly how to take it.
I'm trying to pull up here to see where those puts were trading on the 8th when the stock just completely cratered out there. Obviously, they were trading more than 26 cents. I'll look and see if I can get the exact price for you, listeners. Now we're going to keep on rolling. It is Monday. It is time for our weekly dose of strategery. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, sir, it's that time of the show. What you got in store for us today, sir?
I want to talk about the collar. And I'm going to talk about the collar in a way that just something that I'm doing right now. I can't give exact strikes. Compliance kind of frowns upon that. But I want to go through some things that I'm doing right now in the bond world. And that I've been talking about this a lot lately, but I've been doing covered calls on IEF. And by doing covered calls on client bond holdings. And keep in mind, this is something to where I'm not using IEF as my aggressive strategies by any means. What I'm doing with it right now is I'm just trying to get bond exposure for long-term portfolios, and I'm trying to get a higher yield on it. So I'm selling covered calls on IEF. And so what I'm concerned with is if we do have some type of hyper major inflation and the world of bonds just goes to heck in a handbasket, so to speak. Do I really think that's going to happen? No, not exactly. But I don't think it's out of the question, but I'm really not thinking that it's going to be a major possibility. So what I did is recently for a lot of the IEF holdings with which I have clients in, is I've turned it into a collar. And what I did was I bought a nice, juicy, meaty garbage put roughly a year out. And why did I do that? Well, what I did is I did the math on it, and I could make up that premium in about 2 weeks, just because the premium did not appear to be very expensive to me, and it wasn't when I bought it. And so I did that just because of the fact that I don't like having to make decisions with larger sections of people's portfolios. So in other words, if I'm doing my aggressive strategy, I make decisions on that every day. I do this, I do that, I buy, I sell. I don't trade every day by any means, but it's something that I'm very active in. However, this is a larger sum of money for a lot of clients' holdings that I have. This is in their retirement funds. This is in things like that. And so with this, what I want to do with it is have it set to where even if we have some type of major hyperinflation, well, will the value of this section of their portfolio go down if IEF goes down? Well, yeah, of course it will, because it is technically bullish. But what I'm doing with this is that I'm trying to create income, as most bond portfolios should. But let's just say that maybe, just maybe, we have some type of major yield increase and IEF just goes down the tubes. Now, once again, I don't think it's going to happen, but if it does, the cost for the garbage puts that I bought roughly a year out, or I shouldn't say a year, but roughly 10 months out, are not that expensive. And so my thought is that I'll continue to do what I'm doing, but essentially the premium we collect, whether we collect a 1 week option, 2 week options, 4 week options, whatever the case may be, I'm missing out on roughly 2 weeks of premium, or roughly a half a month of premium when doing this. So from that standpoint, I know that if we do have some type of major inflation, then if that's the case, then likely stocks will go higher. But if we have that, and bonds do go lower, or if we do raise interest rates unexpectedly, then by doing that, I have something in place in that I don't have to make a decision. I can just say, okay, I'm going to keep selling premium on the way down. And if for some reason we do actually have a 20 or 30% drop in the value of government bonds, then I have a put in place and I'm well prepared for that. And so I believe that there are certain times with which buying garbage is appropriate. And I think this is one of those times because of the fact that no matter what kind of trade you want to do, whether you're aggressive, passive, whether you want to be conservative or whatever way you're doing it, I think it's important to look at this from the standpoint of a risk reward. And that's what I'm doing with this specific trade. And that's why I'm actually buying puts in the bond world. And as if life couldn't get any better, it might not happen today, but maybe within the next couple of days. I think, and this is more based on my technology people more than my compliance people, I'm hoping to have an extended strategy blog out, and I will post it on, and I will send out a link on Twitter. So make sure you follow me on Twitter at Mike TOSAW. I'm hoping to get it today, but I can't promise that. Hopefully sometime this week, I will have an extended strategy block. I'll make that a weekly thing, and this might be the debut, but we will see.
All right. Stay tuned for that, listeners. Give him a follow at Mike TOSAW, TOSAW, if you want the latest on when that drops. Meanwhile, let's head on out to you folks, a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's do it. Let's get to the mail out there. By the way, let's pay off some of our polls. We asked you guys again just over the end of the last week into the weekend. You know, here we go again, once again, threatening to break the 20 handle in VIX land. What are you guys feeling a month from now? Are we going to be below 20 or above 20 in VIX? And once again, our audience, if you're nothing if not consistent, the breakdown was almost identical to what it was a month ago. Last month, it was roughly 2/3 to 1/3 above 20. And this month, and which turned out to be the right call, obviously. And this month, close to it, about 62% for above 20 and 38% for below. So slightly more for the below 20 camp. But other than that, almost exact same percentages. So you folks are, if nothing, consistent. And that's something will keep VIX above 20. You're saying to the meatball, you're saying, pshaw. to your great VIX sucking sound to the dark side. We're staying above 20. So far, you folks have been right, so probably shouldn't be betting against you. Speaking of betting and wagering and volatility, we got another fun question of the week up there for you right now. Ad Options is the place to go to make your voice heard. We said a lot of people are talking about volatility. They're slinging around. This is the most volatile name I've ever seen. But which name actually holds the crown in terms of which is the most volatile? Everyone talks about your Teslas and, of course, your Bitcoins and even vol itself, VIX, or even the meme king, GameStop. But which one is the most volatile? We'll keep it straightforward, just straight up, at the money 30-day vol. Don't look. Use your gut. Which one you think has the highest level of volatility? You gave you 4 choices. Like I said, Tesla, Bitcoin, VIX, or ye old game. I'll let you weigh in on that. I'll also let you weigh in on these 2 questions we have from our listeners. They're kind of related, so I'll put them together. First comes from Nicholas. He says, curious as to the All-Star panel's thoughts on the relisting of mini options in 2021. And then we got Tom asking, I heard your interview. I think he's referring to the one I did with the Gatsby folks a few weeks ago. He says, and the talk about fractional options being issued by brokers. How would something like that work exactly? That's a great question. So let's get into that fun stuff. First off, let's go around the horn. Let's go back to the meatball. Mr. Meatball, if you have a thought and a vote for in our volatility poll, which of these products is inherently the most volatile, at least right now, as of when we posted the show. And then B, more importantly, what do you think our audience is voting for? And then C, what are your thoughts on perhaps the return, as our listeners want to know, the return of mini options or perhaps the listing of fractional options, sir?
Well, I think Bitcoin has the highest realized volatility of all those. Although now that Elon is the master of electric TikToks and his CFO is the master of coin, I think we could see Tesla upticking a little bit. And in terms of mini options, I think now that we're in a commission-free world, I think they make a lot of sense. I think it's time to readdress these and talk about bringing them back, especially now that there's all these $3,000 stocks. It makes sense. Mini options make sense for names like Amazon and Google and Microsoft and Berkshire Hathaway, all these names that are GameStop, that's $250, right? Mini options make a lot of sense, and I think would be really beneficial for kind of more standard, overwriting and hedging strategies for the small Robinhood retail trader, and I think they would blow up. I think there would be a great idea, and I'm all in favor.
Yeah, I'm definitely down with that. This is something I've been saying for a while, that I think this is a perfect time to rethink that. Back when we initially thought about it, we had commissions, A and B. Apple was threatening 700. That was the reason, remember, listeners, they wanted to do that. They wanted to make Apple more accessible to the masses. Now we have a legion of names, as Mark pointed out, that are north of 1,000. And they're very popular names. And Tesla was threatening 700 not too long ago. I haven't checked today. Maybe it's back up there. Who knows? The thing moves 10% at a clip. I'm not saying that's my vote for the vol poll. I'm just saying it's a very volatile name. I'll use the cliche that we mentioned in our poll. Mr. Uncle Mike, same question for you. If you have a vote in our poll, have at it. B, more importantly, what do you think our audience is voting for? And then C, what are your thoughts, as Nicholas and Tom want to know, about the perhaps relisting of mini options or perhaps the issuing of fractional options, sir?
Yeah, I like the idea. I liked them the first time with the mini options. I used them. It was just kind of one of those situations to where if I have a client that's contributing X amount of dollars per month, and unless you're putting in 100 shares and you want to buy 100 shares of Amazon per month, well, I mean, if you're doing that, then I have large clients, I have small clients, but I don't have clients that'll put in $300,000 per month typically as like just their monthly contribution. So let's say that I do have a client that's putting in like $3,000 a month, or maybe every other month, or whatever the case may be. And let's say we did want to buy Amazon. But
let me just say that if you are a client interested in investing $300,000 a month, Mike TOSAW is your man. He will be a great broker for you. He would fully love to help you invest $300,000 a month.
Just if you have just your chump change, I will gladly take that. I'll help you out with your chump change for $300,000 a month. But if you are, what did happen a lot would be if somebody did want to make a contribution every month, and they could only you're only going to put in between $200 and $5,000 a month. With a lot of my clients. If that's the case, then the mini options were very helpful. Or let's say that someone had a portfolio allocation of 2,072 shares of Apple. Well, then let's say we were going to sell calls on the 2,000 shares, that's fine, but then the 72 shares wouldn't get any love. Well, if we bring back the 10 stock options like we had at one point back in the day, I was able to sell shares on the remaining 70 shares. The 2 shares we couldn't do anything to, but nonetheless, it was something that I used and I would really like to see, quite frankly. The other thing, in terms of the VIX poll, I think audience south of 20, and I think south of 20. That is my thought.
Well, that's the old poll, but I'll allow you. Yeah, our audience right now, GameStop is running away with it, 72% in terms of which has the highest 30-day volatility. Tesla and Bitcoin are tied at 14%. People are spooked away from VIX. Not a single vote for VIX. Like, this went live before showtime, so it's still early days. We shall revisit it later in the week. Make your voice heard. If you disagree with GameStop, you think something else is there, maybe you agree with GameStop, make your voice heard at options. That's a good question, especially Tom, about how the fractional options would work. So I definitely agree with relisting the mini options. The folks from Gatsby were talking about issuing fractional options. And the second he said that, I started having some of the same questions that you have here, Tom. How would that work? Who would issue these? What does OCC have to do with these? You know, I had the CEO of OCC on very recently. I wish I had asked him that very question. That would have been a fascinating one to discuss, because they're the kind of the keepers of all the contract specs. But these fractional things are going to be kind of issued by the brokers, so which is a weird thing. And how do you mix and match? You know, does everyone get a third of the contract, for example? How does that work? What are your Greeks on that fraction of an option? You know, what if you want to get out, but 2/3 want to stay in? You know, there's a lot of questions to be had on the fractional options thing. They seem to be pretty gung-ho on it. I don't know. I think the minis make a lot more sense because the work's already been done. The commissions are gone. They're a lot easier for people to understand, and certainly from a listing and functionality perspective, they make a lot more intuitive sense. But I think either way, something smaller and more bites. Look at the freaking micros at CME. Those things have been the home run of all home runs, and no one even thought that when they were listed. So smaller bite size is the way to go right now. So anything that gets us closer to that, Tom and Nicholas, I think will probably do well. But I think we're probably going to see minis before we ever see any sort of fractional thing. Now, time for our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're keeping an eye on for the rest of this week into our next episode, which is Thursday. Mr. Meatball, we'll start with you, sir. What are you keeping an eye on until Thursday? Is it the great volatility sucking sound, sir?
Yeah, I mean, it's that vol suck. And just one real quick comment on the fractional thing. I think that would be a huge gift to the market makers. My guess is they would have to do like an end of day VWAP to print it. And the market makers would just have to, they would basically build a trade throughout the day and then put it up all at once. I mean, that's about the only way I can think to do fractional options. Imagine what you could do as a market maker if you knew there was going to be one big buy at the end of the day every day. I mean, it would just be like, I mean, I'm opening a market making firm if these things come back. I'm not kidding.
But you're right. It would have to be some sort of weird end of day, or it couldn't be an instantaneous type thing.
Yeah. The same thing is with fractional stock shares they're doing right now. You get like a VWAP that's based on kind of a period of time, and it's until they build the entire portfolio. Yeah, no, this would be fractional shares. The reason why the brokerage firms like them is because I guarantee you they're getting a really good PFOF on something like that. And then two, it's just the market making firms would be all over it because they would just print money on these, and the loser would be the client. That's why Mark, just one more, back to our point, the mini options make so much more sense. And in terms of what I'm watching on the week, is the VIX going to get to 20? Is the S&P 500 going to get to 4,000 this week? Is the Fed going to trip us up midweek as they are prone to do? Questions that I have for this week that I will be watching. All right. And then I've also got to get on the phone after this and start my auto draft of $300,000 for Amazon stock to Mike TOSAW.
To allocate to Uncle Mike. Well, if you want to cut down your allocation, that's up to you. But let's go on out now. Uncle Mike, sir, what are you keeping an eye on for until Thursday?
Well, I mean, if Seabass is going to put in $300,000 a month, I'll be honest with you, that's probably what I'm going to be keeping an eye on most of the time. But nonetheless, I think the Fed is the thing that I'm watching for the most part. And I think that that's going to be the main market mover this week. We could have some surprises in other areas, of course, but I think the Fed is the main thing for right now. Want to continue to keep an eye on government treasuries, seeing if that's going to be an issue, see if the Fed makes that an issue. And although I don't have any position in it, I am watching Bitcoin because, well, let's be honest, it's fascinating to watch.
Bitcoin is fascinating to watch, which is why you should stay tuned for the Crypto Rundown. Coming up in exactly an hour, pretty much here on the network. I'll be joined by the Spike's father. You heard him on Vol Views on Friday, but he's got a lot of Bitcoin volatility-related news to share and discuss. So he'll be joining me in exactly an hour on that program to break down all the mad action in the world of Bitcoin derivatives and ETH and the futures and everything else going on. But before we get there, let's go back around the horn. Let's start with the Uncle-list of Mikes. Mr. Uncle Mike, sir. If folks want to reach out to you and want to check out what you have cooking in the land of St. Charles, where should they go? What should they do?
Go to stcharleswealth.com, my website, to find more information on how you can get a hold of me. I am a financial advisor who is very frequently using the option product. I'm more than happy to help. Feel free to give me a call. I don't really have a minimum, but more than happy to help along those lines. If you want to learn more about some of the content that I'm going to be putting out soon, follow me on Twitter at Mike TOSAW.
He says he doesn't have a minimum, listeners, but it's $300,000 a month. We all know what it is. He just put it out there today. Check him out. If you got $300K to burn, stcharleswealth.com is the place to go. And if you got $300K to burn, he'll be happy to talk to you as well. Mr. Meatball, sir, if folks got $300,000, what should they do?
Join Option Pits Pro Service so you can learn how to turn it into our money-making machine. But if you want to follow me, I put out a VIX note every day. I put out some other content multiple times a week. We're going to send you some really good content. We've been calling this VIX Smash for a week now and dropped several good ideas in there around it. So come check us out, optionpit.com, and sign up your old email, and you'll be a happy camper.
Optionpit.com if you, too, want to be a happy camper. On behalf of the Greasiest, the Meatballs, the Uncles, the Mikes, and our friends over there at Demand Derivatives, you want a hot, fun fintech investment. You got some money burning a hole in your back pocket. You want to get a piece of perhaps the future of the volatility market. DemandDerivatives.com is the place to go. Click on the crowdfunding portal. It is still running through April, I do believe, out there. So you can kick on the tires and dive in if you are so inclined. Check them out. And on behalf of those folks as well, and of course myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions about fractionals and minis and everything else, for voting in our polls. Get over there at Options. It's hot and heavy right now. We'll be back again in about an hour with the Crypto Rundown. Listening after the fact. Just hit next, of course. Back again tomorrow, of course. Interview Tuesday, Education Wednesday up after that. Double dose of OPR and Options Bootcamp. And then we're back again on Thursday for episode 2 of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.